Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market started out hesitantly last week and then roared upward as energy stocks rebounded sharply. It was a sell the rumor and then a buy the news situation as POTUS followed through on his threat that he was going to leave the Iran nuclear deal. The tell might have been when there was significant bombing that came from Israel onto Iranian installations in Syria. And the oil market jumped, and the stock market and the indexes did not flinch. So there was seemingly no fear at all and a lot of desire to buy stocks. Fear of a cutoff of Iranian oil did send crude up to 71.89. That is a recovery high, and it did give fuel to those energy oil stocks, which moved up pretty sharply. However, the Saudis said that they're going to fill any imbalance that goes on. They're probably chomping at the bit to get more production out there. And the Europeans, they all say, well, they're still in the deal with Iran, and they have tried to prevent President Trump from canceling that deal, but that didn't mean anything. So the question really is, will the U.S. actions have any real teeth? And we were really wondering about that, and we think that oil is going to pull back. We'll show you that in the short-term view coming up towards the end of the show. Also, the stock market got help from Apple, which has continued to surge post-earnings. In fact, it's up some 20 points very quickly, and that has certainly helped the NASDAQ, which has now had a 70% recovery of its correction that we saw. That all came after those strong earnings and the report that they were going to buy back another $100 billion worth of their stock, putting their money in there that they have from outside of the country, and raising their dividend, and essentially pretty soon going to be a utility stock. And Warren Buffett sees the value in that, and he sharply increased his holdings. So Apple has almost solely been the source of this big uptick that we've seen in the NASDAQ, and regardless of that, the indexes have seen a significant tone change as they have a lot of strength. Coming up a little bit later, I'm going to give you a little peek at our momentum indicators and our stock index report, and you're going to see something that really was a strong tell when you look at that. Big rebounds like the one that we're seeing right now, well, this is the third time since the correction began last January that we've seen, and each one of those has had the bears wondering, well, are we wrong? Yeah, I put myself in the category of a bear, well, really in the category of a correction bear, because I have believed that the correction would end late May or June, and then we would have a better second half to the year, in fact, fully recovering and making new highs. So that's what I had predicted in our year-end show at the end of the year, and I'm still believing that's the case. Our work has shown this correction still has more time to go into June, and now with the S&P 500 some 60% off of its bottom and time passing. Remember, when we do cycle analysis, we look at time frames, which is really one of the gifts that we get out of doing that type of analysis. And the time is passing and using up the time for this correction to occur, which, as we said, goes out into June. So that has us raising our downside targets, which is a normal thing for cycle analysts to do when the time goes by and we're not getting the anticipated decline that you could get in one of those declining periods. Still, like in those two previous rebounds before this one, we think it's likely to fail and the tone to change back to sellers one more time into that corrective period. We're going to raise our targets for the S&P 500 on for the downside correction. We were looking for it to be as low as 2465, which would have been about a 12-13% downside correction. We're going to raise that to not getting down to the last lows to about 2600 on the downside in June. That is still about 125, 130 points down from where we are right now, and that would actually be a real continuation of that correction. Let's take a look at our 60-minute chart of the S&P 500, and we could take a peek at what happened during this week. Yes, you could see early in the week we did have the stock market moving significantly towards the upside late in the week, but early in the week it certainly was a floundering market, as you can see. It fell off here. The euro fell off as oil moved over $70 a barrel on Iran and Venezuela. And here's where POTUS says his decision to come on Monday afternoon on the Iran deal, and you could see that scared the market. They really thought the news was going to be bad when you look at that. Here on Tuesday, crude oil came and fell $2.50, and that actually broke the energy stocks for a few minutes right there, as there was a rumor that came that Trump said he would not pull out of the Iran deal, and you could see that was caused energy to move down. That really gives you a sense for how the energy stocks have influenced the markets this week. And then the news came out right over here on Tuesday in the late afternoon. The U.S. had pulled out of the Iran deal, and the stock market, well, it took off from there and did not really look back at any time. You can see what happened during the whole week. Crude oil lifts here to $71, and the stock market likes that. PPI comes out only up 0.1%, so it was not at all scary, and that prompted, I think, Fed Bullard later in the week to make some comments about the interest rates already being at neutral. Look what happened here on Wednesday. Energy stocks lift the market up sharply. You can see that right there. Here, the CPI on Thursday comes out, and it's only up 0.2%. The core up 0.1. So inflation really looking docile here, and bonds started to rebound a little bit. Big update that you can see on Thursday. Friday, not much happened. It was pretty quiet in here, and got a little bit of a lift early in the day, and then it started to pull back. But the S&P 500 for the day still up about 4 points here on Friday, as we get with just about 2 hours left to go in the trading session. Bullard's comments that the interest rates are now at neutral also prompted him to say that, well, he thought that the rates didn't have to go up anymore, that they could stop right here. And we have only a modest firming in the bond market, but I'll show you in the short-term view that we probably are going to have a bit of a change in here in the stock market, in the bond market, where stock market maybe is going to get some sort of a pullback, and I'll show you that. But the bond market, we might have seen for the near term the worst of that. So I'll show you that again in the short-term view. For the week, the stock market strong. I mean, it gains, depending on which index, 2+% on the week. Bond market, not very much change going on in there. Still the yield curve got a little bit flatter and then kind of held in here. People all looking at that yield curve, and I think bullish comments are about preventing that yield curve from inverting also, so they don't want to see that happen. That has prompted the dollar to give us a very toppy look. I'll show you that one also. Gold, silver, platinum, those markets really giving us a sense of firming, and I'm turning positive in the gold market and looking for a significant upside move. We've done some recent recordings on that you're going to want to watch on the gold market. So I'll show you the short-term view on that one. Also, oil, as we said, moved up to a recovery high and then started to roll over. There's probably a pretty good pullback coming in the oil market pretty soon. That's the opening segment, and I'll be right back to show you the best and worst stocks for the week. All right, for the best stocks for the week, the very best stock was TripAdvisor. TRIP. This is a stock in the online travel category, and it was back a couple of months ago that I said, wow, I had traveled and I used Trip a lot on my trip, and I was saying that I really thought that the service that they offered was really strong, and then when I looked at the chart, I saw a potential bottoming and a potential inverted head and shoulders, base being built, and sure enough, all of that happened. So here is a look at TripAdvisors. If you like our charts, you could actually get our charts on your Thinkorswim platform. Thinkorswim is our preferred broker. TD Ameritrade, Thinkorswim is the platform, and we do offer our charts to our level 4 members, and if you'd like to try them, I will send you a half-price link to give them a shot, $64.50, and you'll get all of our services for that, rankings and trade setups, all of our videos, everything, and try us out for a month. And you can even take our cycle workshop, which is just absolutely phenomenal. 20 modules, 20 video modules that teach you to do this type of analysis. And here is a good picture of that type of analysis right here on TripAdvisor. So what we're looking at here is a good picture at cycle brackets and how they're used. That's what these are right here, and they give us the average distances between cycles. You can see that those are all pretty similar distances. What makes them similar? Well, we measure them from low to low, as you can see right there, and that gives us the indications of the rhythmic motions in the market. See these two blue spikes? That says, well, that's the location of where the expected low is in Trip time-wise, and here is the intermediate support. Wow, right on the button in time and price, and it absolutely explodes after that. 25% gain on the week in there. Earnings beat, analysts upgrading it. And look at the inverted head and shoulders in there. So this is the inverted head and shoulders measurement way up over here at $65. It's trading at $49 right now. But this is the first week up. You can see that. Now, if you, in the most bearish scenarios, which you can see right in here, it rallied for about 6 weeks in here, rallied for about 4 weeks in here, rallied for about 2 months in here. Then when it made this strong base, it rallied for about 2.5 months. Here's the first week up. What does that tell you? It's easily going to hit the target zone on the upside in here. It's going for it right now. It might correct off of that 55 level, but then eventually we think it'll head up to that level right there. Beautiful inverted head and shoulders. A great look at cycle analysis and how magnificently it works and how the cycles create these chart patterns. And I teach you that in the cycle workshop. Look at all the negative momentum right in here. You can see that this is the directional component that is affecting each of these cycles in here and pushing each one down to the downside. But if this one is a bullish cycle, it tells you the positive momentum is now in place, positive directional component, and the chances of this turning over and going down are very small. Really loving that on Trip. It is a great looking pattern. Trip Advisor. Triple D is the next one we're going to look at. It's up 25% on the week. They're maybe a little less now. It looks like it's pulling back a little bit. They've gone into a partnership with a shipbuilder. They're going to transform Navy shipbuilding with 3D printing. Wow, that is incredible. And this is also a week one. You can see that strong base building. TripAdvisor, Triple D, both giving you really good indications of important bottoms being set in there. There's the target zone in there. We would expect it to trade up to about 1470. It's now 12. Beautiful pattern in here. I think if it pulled back, you could buy it. Stratasys SSYS followed it, up 15% on the week. It is not anywhere near as good a pattern in this. So I would say no good to Stratasys. I would say very good to Triple D based on what we're seeing here on the patterns. Next, we're going to take a peek into the energy stocks. Like I said, for this week, we had a good pop in oil, though it now looks like it's stalled, and a big upside move in the energy stocks. I'm going to take a peek at these. Most of them have good rallies, but they came from pretty depressed levels, and some of them don't have absolutely great patterns, but some of them are okay. The best one for the weekend, one I think has just been an outrageously good pattern, is Petrobras. That is Petroleum Brazil, right? Petrobras, Petróleo Brasileiro. I don't know how to say that. And there you could see it's been a very, very strong upside move. You can see in here the magnificence of this analysis. Here you could see the head and shoulders top that's formed, right? It's this cycle that made the left shoulder, this cycle that made the head, this cycle that made the right shoulder, a breakdown, and it moves down. It gets very close to the downside measurement right there, and then turns up. And then you could see positively configured cycle. That tells you that it's bullish and that the next cycle is going to be strong. And sure enough, it's strong. And then the next cycle you can see right here is very strong. So pops up. This one is about the 6th week of the advance, so it's a little bit late. On that, they a 21% gain. There's your target zone over here. I think 17.5, 18.25 is, or 18.5 is a reasonable upside target on this in this good pattern. Now, this is a big move, and it is a bit overbought, so I wouldn't chase it here. I'd wait for a bit of a pullback. The next ones I'm going to show you, I think, are installing areas. Noble Corp NE is the first one, and you could see this resistance zone right there. Again, the cyclical pattern's very clear. This dotted one over here that you can see is the OIH. Of course, this is a driller, so we're comparing it against the OIH, which is the drillers ETF, oil service ETF. Both of them in rising phases right there. This one bottomed a little bit early. That happens under bullish conditions. And it's an unusual thing that it got up this high. The reason is because you see this low got lower, even though it really held there and rejected that bottom. Chances are when you get that, it won't make this high, or if it does, it'll fail just close to it. So we're kind of looking maybe just a little more upside in here, rolling over maybe at 570 or so. It's 5.25 right now, and big resistance zone over there. So we're not optimistic as it gets into that area of resistance. The next one we're going to look at is RIG. NE up 11%, RIG up about 9%. This one got up into that fib target zone. It had a more bullish pattern that you can see in there, as again, here's your base being formed, solid pattern. It made a flag right in here, which the odds were that it would break to the downside. The odds are about 1 in 3 that it will break to the upside. Well, it did, and gets up into that target zone. Again, you could see this pattern suggests it's going to roll over. So up in that zone, it's resistance area. It's pretty pretty significant. Here's a resistance confluence right in the middle there. So all of that says to us that with this area of 13.5 is a tough spot for rig, up 9%, and we think that this one is in a toppy area also. Not loving that when I look at that. Occidental Petroleum has gone crazy. Look at that upside move right there. Full disclosure, just before the show, I got short this stock. I got short it because it is so overbought. In fact, our option bias indicator has gone to what we call a P1 orange. It is an extreme overbought condition, and you can see the cyclic patterns are suggestive of a pullback here to well around 80 bucks. It's now at 85, so I'm thinking that stock is one that's going to peak. Earnings were good. It exploded on the upside earnings, but I think it's way excessive and very likely to pull back. I mean, one of the key things I like to look at, you see this line right over here, that line right there is the 34-week moving average. And you can see that whenever it moves away from the 34-week moving average, well, eventually it works its way back to it. Often during when it's below it at cycle peaks or when it's above it at cycle bottoms. Well, look how far away we are right now, as far as it ever gets. So I'm looking for the 34-week moving average to be rising and the stock to be falling and get a convergence right in there. I think Oxy is just way, way overdone it. So I recently, just moments ago, made a comment about I think that gold and silver actually are getting into a positive period. And as the dollar starts to roll over and the bond market gets into the final phase of its decline in here, and that's favorable for the gold market. Well, if you look at PAAS, Pan America Silver, this is a very, very good pattern. Now, what I want you to see is that yellow zones are corrective zones. You can see that. So each of these corrective zones in here, it struggled during those yellow periods. You can see that right there as it rolls over, gets under the moving averages, and then struggles. Look what happened here. This is a different picture. It rolled over, got into that yellow zone right there, and looked like it was rolling over. It hit that support zone or very, very close to it right there, which we had considered the buy zone if it got down a little bit further, but then it exploded to the upside on stronger earnings and restarting one of their mines. So this is an unusual look at a much improved stock. And now this period right in here of correction is brief. This is a few weeks right in here, and that's our buy zone under about 1770 right there. So we would really look for this pullback to get into that zone and being a buying opportunity. So now I'm going to switch over to the daily chart so you can see the cyclic patterns in here also. This is an extreme overbought right over there. And when I look at the cycle brackets, you could see it times out to about the second week of June. So it's about a month from now. And like I said, we're likely to get a few weeks of pullback. And look at that, at the extreme overbought on our option bias indicator, this big shooting star. So that's a pretty good indication that here back on the weekly chart, we're going to get that pullback that we're looking at. And we think that would be a really good buying opportunity on the stock. I don't want to trade it short for that little possibility right there because it's so strong. But again, we're thinking it pulls back to maybe mid-17s, and then you get that good buying opportunity. This level is 1781. This level is 1725. So that's where we're looking for it to pull back to, and I think it's going to be a good stock after that. Now, here we are in a time period where the stock market is gotten definitely a revival of strength as the buyers have gotten really brave and encouraged and pushing things up. But we're getting this, you know, it's Apple and it's energy stocks, and it's kind of narrow in the advance, and often the it takes the financials to really get moving. Now, financials generally do well under the conditions of the anticipation that higher interest rates are going to bring them more profits. Well, they really haven't done well during that period of the anticipated higher interest rates, and now interest rates, maybe they don't have all that much more to go up, and some of these patterns are really looking worrisome. Let's take a look here as we look at Morgan Stanley, and you're going to have a very nice picture here of what we call harmonic families, multiple time frames that we use here on cycles. And this stock is really giving a very toppy look and is dangerous. So Morgan Stanley up about 7% on the week. It's got a decent gain. Now what I want you to see in here is that you can see each of these cycles. See the powerful upside move from low to low, low to low, low to low, all powerful. And note the minor cycle that you could see right in here. That's these blue light lines that you can see. And each of those kind of make a halfway point, in the cycles. And this one came down all the way to that last low. That means that it's likely that that's going to fail. In other words, roll over in here and get another decline into July. This is a bad pattern and really looks like a head and shoulders top forming and incompleted, making a right shoulder here. This is a dangerous pattern, and I wanted you to see it. These have had poor performances after earnings that were pretty decent. Goldman Sachs, this has the colored phasing in here, almost the same thing. But this has got even a much more negative configuration in here. As you can see this cycle low right over here, as it broke this, that's negative, and now you have this negative look to it right over here, hence our downward projection into late June and that red zone right there. So these are ugly looking patterns in here, and I don't know how the stock market's gonna continue moving up unless these things somehow fix themselves. You can look at the XLF, and this is the XLF is also a good guide, and this also a negative configuration right there. It gets up into that confluence of resistance this week, but look at the way it's pointing to the downside here into early July. All of that says to us, well, it doesn't look like the stock market's going to get any real leadership out of the financials, and that's something to think about. Pretty significant there. So I wanted to show you Morgan and Goldman Sachs and the XLF, the financial ETF, because there's a negative message there. And I made a point in the beginning of the show that I just don't think this is quite yet the time for the bull market to resume itself. Again, I think that's in the second half, and that the risks are still there. And when we look at these financials, it pretty much tells you that. We're going to be right back, and we're going to look at the worst stocks for the week. For the worst stocks for the week, I don't have a lot to show you. Since we had a market that rallied over 2% for the week, we do have only a few stocks to look at here. One of them, we'll call it I want to call it the debacle du jour, but that would make it of the day, right? Well, this might be the debacle of the month or the year, as a Symantec, SYMC, gets absolutely cratered. Take a look at this chart right over here. Man, is that ever ugliness. So this is another way that you can use cycles to prove a particular direction or where there are risks, and I'll show you that in here. I'm going to give you a good example of that. You can see this cycle right here. So it bottoms right over here. I'm going to show you all of the bottoms. You could see the cyclical action as you look at all of these. So that's your patterns in there, and each of these patterns show you that there is the principle of variation. Shows you that these can be off by a little bit time-wise, but they're usually only a matter of 2 to 3 bars, in this case 2 to 3 weeks. This, you can see, it was rallying and it was strong in these cycles, but then it began to flounder, and you got this moving here to the downside. You got a new high, but that failed, and then you got this left shoulder, and you got a head, and you got a right shoulder forming in here, and that was a problem. So if you look at this last cycle right over here, after this negative configuration, it fails at the 34-week moving average, which was right around the 38.2% fib correction. In addition, through this whole rally phase, it went nowhere. You can see these other rally phases, well, big upside moves, well, that one didn't last long, and that one didn't last long. This went nowhere. So you had this bear-looking pennant or flag that formed in here, and that was a warning that the stock had downside risk. But I could have never known that it was going to move down this sharp, down 34%, 35% at its worst level here on Friday. Earnings beat, but their forecast was real weak. And on top of that, there is an investigation going. There are financial issues that could lead to amended results, is what I'm quoting. And they're being investigated by a shareholder rights firm. Analysts are downgrading this one like crazy. And this is a look at a stock that has just absolutely been ruined. And I would say that, if you get some relief in here in the next couple days, week, there's probably another big wave to the downside coming in this stock. There's only one more group for me to look at here in the worst for the week, and that is the retail stocks. We're going to start with Macy's. These guys all joined together to move to the downside, and there's some troubling patterns when we look at these also. Here is Macy's, down 7% for the week, 6% maybe now, as analysts have downgraded this stock, and that's what hurt. So you can see that we had a decent pattern in here where you can see the big patterns right in here. These again are called harmonic families, and then the small patterns, they make up these small cycles, and you can see how they traded perfectly there, right? And then the next rally is supposed to go to a new high. It hits this resistance zone and then turns down and gets close to breaking down right over there under that level. That makes this point to the downside, and if this breaks down, it makes the next cycle point to the downside. That's why we have that projection right over there, like it can't get through that resistance. It's going to have to get above this level, above 32.5 or so, which is really a tall order for it to be able to fix this. And I think it's really unlikely. And if anything, it's more looking like it has a dangerous pattern in here. So that's a look at Macy's. Take a look at Kohl's, KSS. And another broken pattern in here. You can see that this beautiful rounded bottom in here that made the bottom in the inverted head and shoulders, well, your target for the inverted head and shoulders easily got hit right over here, and then it exploded to the upside. Note the evening star there, the evening star here, that was a double evening star, made the top, or M top. And then it came down and broke the lows and is pointing to the downside into July. So this is a bad pattern. There's some support in there. Maybe it can stop the downside about 56 or 55. But that's a weak looking pattern there in Kohl's. I've got a better one for you to buy, but it's not Walmart yet. This one still looks like it has 2 or 3 weeks on the downside. Its low due around the first week of June. They buy in the company Flipkart for $16 billion. The investors did not react well to that at all. We'll call it 2-3 more weeks before its bottom is in place in there, and then maybe you can start to nibble on that one for a bounce. But this might be the best pattern of all in these retail stocks. Again, we're showing you the multiple harmonic patterns or families in here, where you can see the big patterns. Now these big lines right over here trace out these patterns right over here on the dominant cycles, and you can see they're almost perfect. And then you have the smaller patterns right in here. So you have this one and this one. That's 1 and 2. You see that breaks it right in half? Look at this one, breaks it right in half. 1 and 2, perfect cycles, right? Look at this one, breaks it right in half. 1 and 2, perfect perfect cycles. Unbelievable. Where are we now? Well, when you get into the nested area where they're both pushing up, you get the best advances. This advance right over here, when it did it, went from 56 up to over $72. So that was a 16-point advance. This one here goes up from 45 all the way up here to 83, a 38-point advance. This one goes from 40, let's say 50, up to 88, a 38-point advance. And this one bullishly configured in the support zone at the 34-week moving average, at the point it's supposed to bottom and then move up, hence the buy zone right over here. You could see the hammer bottom forming right in there. Am I telling you enough in here that says, well, I mean, it doesn't necessarily mean that absolutely you're going to buy this one, but there are certainly a lot of indications that this one will likely move up. One more thing I want to show you, and that is, if you use the slim ribbons, and here are the cycles on the daily chart, and you can see the upturn here already, the slim ribbon is negative. In other words, the momentum for the shorter term is negative. It turned negative here with the stock at around 75, and it fell all the way down to 66. You can see that. Look what happened here where it turned positive. Explodes to the upside. You need the slim ribbon to turn positive to confirm that bottom. You can nibble now, and then people always ask me, well, where do you add? How do you know where to add to positions? Most people, when they get into a winner, they don't want to add to a position when it's moving in their direction because they're afraid that it's going to reverse, and adding to their position is going to mean they end up with a loser. But you can see the size of the upside moves in Dillard's, and that says to me that, well, you nibble a little bit now, and then if momentum goes positive, that's your signal to add on to a winning position. Sometimes that'll be wrong. It'll go down again and you'll be wrong. You'll say, oh my God, I turned a winner into a loser. I'm bad for doing that. But if you want to maximize your trades, if you want to be able to get much bigger winners than you do losers, that's the way to do it. Take a little nibble and then add on to the position. That is just a good look at our cycle analysis, and a good look at how to use it to your best advantage and understand those multiple time frames and what they mean. Take our cycle analysis workshop, and you will be really well informed about that. So what's coming up now? Well, like we do every week, our short-term view. Before we get into the short-term view, I want to show you something really quickly. This is our new service, the Stock Index Report. This is a report we put out once a week, plus we update it as necessary. So it comes out on Thursday mornings. If you're a stock index trader or even an investor, we show you all of our analysis. That's all of our cycle analysis, all of our momentum analysis. So many things that will just make so much sense to you, all in this one report. And you're going to find it amazingly comprehensive. I'm going to take you quickly to our website so that you can see what this looks like. So here's the Stock Index Momentum Report. And when you open this up, you're going to see, well, there's a lot in here to look at. And over here are all pull-down menus right in here. So what I want to do is I want to scroll down and show you really quickly what's in here. Stock Index Cycle Momentum Report Overview right there. And what we do is we open that up, and you're going to get all the information about how to use this. And then when we scroll down here, you're going to see the stock index summary. This is our update that we did just a couple of days ago. And I open that up, and what you're going to see is our momentum indicators right there. So that will give you a good sense for the summary on the conditions in the monthly, weekly, daily, and our projections for the stock indexes. I'm going to close that right now. This is our momentum indication tracker, and you're going to see, well, look at that. Look what happened to the stock market in here as all of the monthly, weekly, and daily charts and intraday charts turn to positive momentum. Boy, is that ever a picture. And then when I come down and show you these charts, you're going to see there's a peek at the 2-month daily charts comparing the S&P 500, the NASDAQ, and the Russell, you can see they're all green if you look on the right side of them, so positive momentum there. And if you're even a short-term trader, there is the 2-hour chart showing you the strength in each of those three indexes. Plus on the bottom is our MCI, market condition indicator, all of that turning positive just in the last couple of days. So that gives you a good picture for the momentum. And then if I scroll down a little bit further, you're going to see there what we give you are the overviews. And this is just a picture of the S&P 500. Take a look at that. So what we show you is our weekly chart right there, and all of our cycle trend indications on that. And then we'll show you our daily chart right there, which is our shorter term, and then a 6-month picture of momentum, which has turned positive now in the S&P 500. We're going to also give you our overview in there with our long-term outlook, our weekly outlook, which is intermediate, and our daily outlook that you can see right there. Just lots of great stuff there. Support, resistance, alert zones, all of those really important to you. And we do the same thing for the NASDAQ and for the Russell also. So just unbelievable, huge amount of information in there. We wanted to bring it to you. We wanted to make it so affordable, and even more affordable right now, because what we're going to do is we're going to let you get grandfathered in for this unbelievable low price. You know, some places would charge, I don't know, $100 a month, $50 a month, but here's what we're going to do, because we want to get a lot of people in for this pre-launch period. Send me an email to slim@askSlim.com. And I'm going to send you a link that's going to hold your place, and you'll have this price forever. $15 a month. We want to just load it up with a lot of people. So you're only going to have 5 days to do this. So send me a email, slim@askSlim.com. I'm going to send you back a link, and we're going to hold your spot. You're going to get all this for just $15 a month, and we're going to lock it in before these prices go up. So make sure that you write me right now, because I don't want you to miss that. That is the stock index report, and here comes our short-term view. Wow, and when you see all of that green on the momentum indicators, you can see why we raised our view for this correction in here, that it's likely not to get down as deep as we originally expected. We want to always respect that. You know, one of the important traits for success is flexibility. You got to always be monitoring these things. So really good stuff there. Now, if you're already a level 2, 3, or 4 member, don't write me, because we're going to take care of you on this for sure. So this is for our level 1 members, or for new people that only are interested in the stock market and this product. Unbelievable, $15 a month. So send me that email. We're going to lock that in for you, slim@askSlim.com. Follow me on Twitter @askSlim, and become a YouTube subscriber. Make sure you give me a thumbs up if you like everything we're showing you in here. And we're going to get into our short-term view right now. So we're going to start out by looking at light crude. We look at daily charts in here, and what we always do is take a bit of an accounting of how we did. We're about 65% in the last week, did pretty well. This chart right here is going to show you a picture of what we think is toppiness here in the light crude market. It's beginning to pull over, and that got up past the 100% fib and pretty extended up there. Now there's a minor support right in here that we have our picture that we're looking at. We're going to look at only this last cycle right here. And this support area right there that we're looking at is, that's about $70 down to about $69.45 right over there. That is the very first level of support that we think it will get into. Now you can see the slim ribbon, that is a positive momentum. So we're in positive momentum, but where we are is here. So if you want to take the different areas of a cycle, this is a bottoming, this is a rising, this is a peaking, and this is the declining phase right over here. So where we were entering into the declining phase of the minor cycle, we would expect, you can see these holding the 21-day moving averages in here. So we would expect really a worst case right now is coming down here to about 69, and then getting one more pop up in here, and then this takes over. And that's why you can see we have it rolling over, and why we think that we're going to get into a little bit more of an extended phase. Momentum's still positive, so for the moment we're going to look for declines to be modest, but we are looking for a downside week, and probably going to the downside through late week. My note on my chart looks, on my notes look like this. I always draw these lines and arrows so that I know what to say to you, and that's what I'm looking for right there. Just a decline through the end of the week and then move up. Last week we said that we thought it would roll over at around 70-75, so it got a little higher than we expected, and we thought it would only be a small amount of weakness when it rolled over, and that if the Iran-Israeli situation heated up, well, you'd get a little higher or a lot higher depending on how that went. And that did positively affect it, as you can see. So we think we're going to get into a bit of a corrective period in here. And we're going to call it a small down week in there in light crude. Next, we're going to look at the dollar DXY. And this is a great looking peak that you look at the dollar there. You have that evening star, and again, if you think about the declining phase, the rising phase, the peaking phase, and then the new declining phase right over here, and then the bottoming phase after that. So it's bottoming right in here. That was perfect. Peaking, you can see that happening. Then the declining phase comes. And that's where we are right now. So we're going to look for a decline in the dollar in a down week to about 91.80. Again, you can see the 21 bar moving average right there coming in. And, you know, that's basically where your support is. And so it looks to us pretty much like a down week in there. But again, we're focused on the momentum right in here. Now, you can see oversold in here with an upside slim ribbon. Generally, that will bring you a little bounce. So you want to get this projection oscillator coming up, and the dollar not coming up much, and then we'll know that it's probably going to roll over again. So it's a little bit oversold on this little short-term look right over here. We think we'll get some attempted bounces, but overall we're going to look for that move down to that 91.80 level. A lot of people trade the euro currency instead, so we like to show the euro also. We thought the euro last week was in a pop where it would be bottoming. Last week the euro was excuse me, oversold, so we thought a bottom was coming. See the OBI right over there, giving us that warning, and there's your morning star that formed right in there on the bottom. So this, because we believe the intermediate pattern has not bottomed yet in the euro, this is actually a sell zone for us. We think it's going to rally up to that area just over the 121 number in there in the next, we'll call it 2 weeks. It might take a little bit more time to get up there. So you can see that really looks like the inverse of that is the dollar. Dollar might be under pressure for a little bit longer yet. And you can see the negative momentum in here and the overbought situation, so it's going to struggle a little bit before it can get much to the upside. That's exactly the inverse of what we said in the dollar. And that's the euro's about it's about 57% of the dollar index. And that's why it trades mostly inverse to it. Next, we're going to look at the gold market. Now, I've been saying to you that I think gold is bottoming. Now, when I look at this pattern right over here, you could see, yeah, this is such a messy chart. And our chart subscribers get this and probably have a good understanding of what this says. I will try to do my best to explain it to you as a new subscriber. A key nested low right over here. See all the cycles in their bottoming, in their declining phases right over here, bottoming phase right in here, and then rising phases all together. When they all rise up together, well, they all rise up big. That's the way it works. When you get to the intermediate points right over here, they may not rise as strongly, but they do rise. You can see that. Where are we right now? Well, we're getting to the bottom of this declining phase and in the bottoming phase right over here. It looks like it's happening already. You can see the early low. We thought 1302 to 1288 were the numbers on the downside. Let's get a closer look right here. And we thought it would test 1302, and it actually got down to 1303 and something. So that was what we thought for the week, and then start to move up. Well, it's moving up a little early. There's a chance we could wiggle down to that 1302 level again. But this is, when I look at silver, it's really turning up pretty strongly. So we have this downward momentum in gold still. You can see that. Starting to give little signs of giving up some of the downward momentum, and now a little bit overbought. So that's why I'm thinking maybe another little test to the downside. But the silver market has now gone to neutral momentum from negative, so that's neutralizing, and that upturn looks in place in silver. So silver looks like it's driving the bus here for the metals, and we're in a bottoming place right now in these metals markets. So, you know, you could be nibbling. You don't have to be aggressive, and wait till it tells you that it's time to be aggressive. Take a look at /ZB. And look at that sell zone, that resistance level right over there, and man, it just keeps getting up into that and backing off. Now, what are we looking at here? We're looking at the small patterns, and that's these dotted lines that you could see right in here. Each of those makes up 1/3 of the bigger pattern. Look at how nicely it's tracing this right over here. That gives it a few more days of chop in here, but again, this is the first cycle of the 3. And look what happened in here. Even in this big bearish mode we are in bonds, the first cycle of the 3 was positive. You could see that right there as it was facing upwards, and then that gave you another upside move. So this looks like it's going to be positive right in here. We'll look for a couple, 3 days on the downside, a little bit right there. This is an upgrade from what we talked about last week, where we thought it would be moving down sometime in the next couple of weeks to around 141.16. That's, we think, further out over here. You could see that. In the meantime, we'll think we'll bottom it here, try to get up into this resistance sell zone again, and then roll over at that point. So we're looking for a choppiness, bottoming in here. Not much on the downside, and Fed Bullard is definitely responsible for some of that in there. And also, well, the market really looks like it wants to try to bounce a little bit more here in the bond market. So that is a good look at bonds, and a good look at the first 4 of the 5 markets that we look at. So the stock market, we said we thought this market would move up this week. We thought that it would move up into the 2700 S&P level to 2709, a resistance zone. On Wednesday, we talked about the 2716 area in future speak. If you want to see all of our broad analysis on the weeklies and dailies on all of the 23 different futures contracts, you really need to watch Future Speak. That's a level 2 membership or higher if you want to watch that. So the stock market got legs on the upside, and the Russell's the strongest of them all, the NASDAQ next. You saw that in the momentum charts that I showed you on the stock index report. And then the S&P 500 is lagging them, and the Dow lagging very significantly of the 4 indexes. The Dow not even at a 50% recovery yet, where the S&P 500 is at about 60 and the NASDAQ at about 70. So all that because of Apple on the NASDAQ. So where we are right now in the S&P 500 is that we saw a more favorable pattern happening, and that's why we upgraded it to a rally last week, and it's moved up through some significant resistance areas. So here is the pattern that we're looking at now in the S&P 500. Now, I've gotten some emails from our members that say, well, these charts, these cycles are not in line with the NASDAQ. That's true. The NASDAQ actually made its low over here on 423. The stock market made its low here in 503, on 5.3. So there is a disparity, or what we call an out-of-phase situation in these indexes, and sometimes that happens. So some key things in here. You got to move move up through the VTL. That's this line right over here. That was a VTL breakout. That also gave you the exact moment where you had momentum switch to the upside. We showed you the short-term momentum in the stock index report. And now you see we're getting up to close to the intermediate 61.8% from the weekly. So we saw this shift, we saw this rally coming. It's gotten up higher than the resistance zone we were looking at, but not by that much. And this area right over here, 2745, is a pretty realistic area for it to try to get to, but it does not change the big picture at all in the stock market. As a matter of fact, when I look at this date right over here on the bottom on this cycle, that's June 12th. This one right over here, well, that's June 12th, as they're nested on the bottom. So we still see a lot of risk when this rolls over into June. Well, what do we think is going to happen in the next week? We think it's going to be a down week. We think it's going to roll over, that this minor pattern right in here is going to pull it down into this rising support level right there. It's rising because we don't have a good anchor point yet on the top because we're still moving to the upside. So this now we're looking for only a minor pullback. 2682 is where that number is right now. Well, that would be only about 41 points to the downside over the next, we'll call this 5 to 7 trading sessions in here. Then get another rally, and then we think that's when we get into that period of higher risk right over there. The period of high risk that we had in here was like right in here, changed because of the way this shifted. So that interpretation was proved to be incorrect. And that's just the way it goes. Analysis works sometimes and it doesn't work sometimes, and we do our best to keep it about 2 to 1 being favorable, and 65% for this week I'm happy with. And we've been having a lot of weeks in that area. So we're looking for a rolling over here in the week, more struggling. Maybe it's the financials that pull it down. Maybe it's the oil stocks that have led the way that now suffer from a retracement to the downside in oil that we see coming. But we see this pulling back, but not pulling back in a big way and then moving to the upside again. Again, over the next 5 to 7 days, something like this, then another rally over here, and then entering into that riskier period over there. If we get above the 2745 level, we will then be raising our downside objectives during this period. However, still not having any indication that the correction is over with. It would take a move above the major 78.6%, which I actually don't have on this chart, I have on the weekly, which would then give us a reason to believe that we had a really early bottom and that the triangular shape was the whole correction. So that's a very important thing to be looking at big picture. Here's the big triangular shape right in here that we've been trading in, and for the short term. For the longer term, it's a little bit bigger, and you could see that, you know, we have a nice little attempted uptick right over there through the numbers. So we'll see if 2745 stops it on the upside. I think it will. 2682 our downward target, that's for sure. So that is a look at, did I say that's for sure? Well, nothing is for sure when we do this type of analysis. What we try to do is get the highest odds. Don't forget the stock index report. If you trade the stock market or the indexes or even care about them, for the what is the cost of a premium cup of coffee once a week for the month? Once a week for the month? Well, that's basically what we're going to do for you on the stock index report, only for the next 5 days. We want to load it up with as many people as we can. Write me slim at askSlim.com, and I will send you that special link and lock you up for that. $15 a month. You can cancel it anytime you want after that if you don't like what the service is. So incredible offer we're making right now because we want to make a lot of friends. So that's why we're doing this, so that we can all be friends and look and talk about the stock markets. You can make comments on the bottom of the stock index report and chat a little bit back and forth. So I think that's a really good bonus for this whole thing. You like the charts? I'll send you half price price link for level 4, and you'll be able to put that on your thinkorswim platform. That is it for this show. I think there was lots of great stuff in there. I hope that you enjoyed it, and I certainly enjoyed bringing it to you. I want you to be unbelievably careful, not only in the markets, but out there, because it is so crazy out there. And we're always wishing you great trading.